Hey everyone, welcome to another Wannabe Finance Bros videos. And this video is going to be slightly different. In this video, I'm going to be talking about how one news headline can create bull markets all across the globe. Yes, I'll be talking about Trump and his tariffs. On October 11th, 2025, President Trump announced an extra 100% tariff on all Chinese imports starting November. Markets instantly reacted, with headlines estimating $2 to $2.5 trillion wiped from the US equity markets in hours. But why does this happen? I think the efficient market hypothesis is a great way to explain this, where all information provided in the market is immediately reflected in the company's stock price. As you saw, all share prices tanked after this tariff announcement because everyone is worried about the supply chain. And where does this get passed on to? You guys. Consumers don't typically like price hikes, so they end up buying less of the same product, which is why investors are more wary about buying the stock and often sell it at times like this. Let's take a look into AMD. The stock tanked 8% in the day that Trump announced his tariffs. Why did this happen? Well, China holds 70% of the global mineral supply, and to make microchips, you need minerals. So it's a really big issue. As an investor, there are multiple ways you can actually approach this type of issue. The first thing is to reevaluate the fundamentals of the company that you're investing in, as you want to make sure that the supply chains, cash flows, ins, outs, operations are fundamentally sound. Secondly, you want to diversify companies, not in just of the market that's working in, but in terms of the supply chain that it operates in. If you look at AMD, most of the suppliers are coming from China, but there's new markets for the supply chain being opened up in different areas all around the world, in places such as India, Vietnam, Mexico, any developing country. Secondly, you want to diversify the types of assets you have in your portfolio, whether it be commodities, golds, bonds, real estate, or stocks, as diversifying your assets ensures that all your eggs aren't in one basket. And finally, you need to align your investments with your time horizon. If you're a long-term investor like me, who's looking to invest for the next 30 or 40 years, then maybe a short-term risky stock may not be a good idea. But you want something that is stable for the longer term. Whereas if you're a short-term investor looking to get the most profit out of a stock today, you might be willing to take a bit more risk than normal. That being said, it all depends on what your risk capabilities are and how much you want to go into it. Let's wrap things up over here. If you look back to the stock graph I showed you earlier, you can see that while the AMD's price goes down for a little bit, within a matter of days it shoots back up, in fact to all-time record highs. What does this suggest? That while stock prices may be impacted by headlines in a short amount of period of time, in a long-term period, it doesn't really make too much of a difference. In fact, companies adapt and actually do better as a result of these headlines. So invest smart, diversify your assets, and let your time horizon do the hard work for you. Thanks for watching and have a great day.